What's good, boys? What's good? What's good? What's good? Now, check the time. We'll check the date first. October 10th, October 13th, Monday. Wow, 5 minutes to 11 South African local time. Now, what are we looking for here? By the way, this is not financial advice. Do not take this and go out there to your charts. I just want to make this disclaimer. Do not go out there, take the advice that I give here, go and implement it on your trading accounts and all that. No, no, no. What you do with this information, you look at this information, you compare against what you have, and you compare against what is going to be shown in the charts after this, and then you go to your demo account and you place your trade according to what you see, not according to what I say, because you may see things that I don't, and I may see things that you don't. But just wanted to put that disclaimer out there. Do not use this as financial advice. I am not registered to give financial advice. I am not licensed to give financial advice, so I'm not going to give financial advice. But I am going to tell you what I think may happen next. Now, as you can see, October 13, Monday night. Where do I see this going next? I don't really have much to go on from this time frame, honestly. As you can see, this is the new week opening gap. This is Friday's close. This is today's open, Monday open. As you can see, there's this big gap. And with that, as soon as the day opened, it opened, né? And what it did was it went up above the level of entirely displaced above this level of this the level of this new, what is this thing, daily fair value gap. Well, so check my Fibonacci retracement on this rejection block. Kind of use it as, kind of want to see using the levels as a stepping stone. Now we also have this one right here, this daily fair value gap. Now obviously, because this is a daily fair value gap, the conditions we're in, if it's gonna be bearish, it's gonna use this daily bullish fair value gap as an inversion and want to go down. How so? Let me just move this away. Let me unlock it so that I can move it away. Let's move that away. Now this is where we're at, as you can see, because this side has a volume imbalance. I included the volume imbalance. This side hasn't got a volume imbalance, so I didn't. That's why you see it extending all the way down on this side, and you don't see it extending all the way up on this side. But anyways, this is where we're at. I want to see precisely tomorrow, because days that are extremely bullish or extremely bearish, and I don't know if you remember what I said, but you probably won't because the video failed to upload. There was a video that I had posted and told people that a really bullish or really bearish day has a really small wick towards the opposite direction. Now when you look at Friday, look at Friday, look at the opposite wick. Look at the buy side wick made by Friday. It's really tiny, and immediately after that, it just kept melting all the way down. If you look at other really bullish days or other really bearish days, the opposite direction's wick is gonna be really small. And now that's an indicator, obviously, if you're looking for really bullish or really bearish days. Remember, this is not financial advice. Now let's see. I want to show you what I mean by that. Where is it? Let's take this one, for example. Look at the size of the wick in relation to the rest of the body. Really small wick towards the opposite direction. Look at this one. Really small wick towards the opposite direction. Really small wick. Really small wick. Really small wick. Now it's not even necessarily an indicator, but it is something to look out for, especially when you're wanting to see if are we gonna go all the way up back, all the way back up above the level of the midnight open. It is important to look at that. Well, not necessarily midnight open. It'll be new day open because it takes place at what, 16 at 5, what time is it? 16:44, something like that. Now, what are we looking for next? As I said, I don't really see much daily fair value gap. maybe used as an inversion to continue lower, maybe used as a stepping stone. This, as you can see, this is last week's open. If we get up above this level on an hourly, on a 15-minute, and try to go up, then I may be looking for these relatively equal highs, as you'll see on the 15-minute and on the 1 hour. So for now, this time frame, don't really see much. Let's continue. Now, this is where things kind of start to get interesting for me. Why do I say that? Is because this is really, really smooth. This relatively equal highs, really, really smooth. This last week's open, nice and clear. This is that daily fair value gap I was telling you about that we may use as an inversion. Well, let me show it to you again one more time. Here it is, as you can see, and here it is on the 60 minutes. Now, as soon as this week opened, it left this gigantic gap. And I think sooner or later, especially considering the type of price action we get tomorrow, is going to be what determines if this is going to happen sooner. If the filling of this entire gap is going to happen sooner or it's going to happen later. Now, what are we looking for? Well, really simple. If the plan is to go up and claim these here, we're probably going to open, maybe even make a small wick towards the opposite direction, possibly a small wick, maybe even coming down into this what do you call this thing, this bullish order block, kind of maybe opens lower, comes in deeper, exits, maybe uses this as a retracement wobble. Maybe the open will be somewhere here because we don't know where it may open. But we don't know where the new day opening gap is going to form. It's probably going to be somewhere not too far from here. It's going to open, maybe come back down a little bit, possibly not even exit this daily fair value gap. Possibly not even exit it, come back, retraces, go back up to claim these, continue making all-time highs. Or it may happen, it may open, maybe up above, come outside, wobble, probe, fill in some of this gap, and then maybe come back down and use this as a retracement to accelerate lower to come and fill this in. Now, as a rule of thumb, I usually like to have more than one direction not indicator as an indicator like Ichimoku Kinko Hyo or your RSIs, not like that, but the things that I look out for in the charts that tell me whether this is going to go up or down. Now, as you can see, this is electronic trading hours. Now, what I look out for is if there are two gaps, if an electronic trading hour chart has a gap and the regular trading hours also has a gap, that would be really interesting. Now, is that the case? Of course it is. How do I know? I don't already checked. But we got two gaps. We got this gap because this is the regular trading hours open time. It opened, came into this gap, and stayed there here in the middle. The next candle is going to draft at 9:30 a.m. In South Africa. That'll be 3:30. It'll be 3:30 because I think daylight savings time hasn't changed the time yet. So it'll be 3:30. So we got two gaps. We got a regular trading hours gap, and we got a electronic trading hours gap. Both of them are bearish gaps. Both of them require this to be filled in. So if tomorrow we fail to displace above this gap and above last week's open, this is last week Monday open. This is the weekly open of last week, by the way. And if you fail to displace above that and leave gaps towards the upside, then what I'm going to be looking out for, obviously, is just to kind of fail, come back inside, find retracement, and continue lower to fill all this in. Until then, we watch. Wow, right now at this moment, I do not have a last line of defense. My last line of defense is basically an imaginary line where I say if we go past this level, then I'm no longer looking for buys, or if we go past this level, then I'm no longer looking for sells. So that's what I'm looking for. That's where my mind is at currently. I don't really see much going on right now. I'm gonna see what exactly the type of price action we have, maybe around 9 a.m. New York time. Because then I will be able to plot my new day opening gap, then I will be able to kind of guess where the regular trading hours open is going to be. Then that's the when I'm going to be able to plot my midnight opening, all of that good stuff, just to kind of see what the market may be targeting, what they may want to gun for, and all that stuff, so that we can use it to form a trade. Well, a demo trade. This is not financial advice, so that I can use it to form a demo trade. Now, do not take this advice as gospel. Go ahead and do your thing, see how you like it. But nna ke bona ka tsela ena and ke ka mokgwa ke nana e tlo etsala ka teng. Ha e se etsale ka tsela eno, obviously we adapt. That's what trading is all about. You have a bias, it fails, you adapt. Or you lose. It's really that simple. Thank you. Good night.